taking a look at how some of these stocks, particularly semiconductor stocks, are higher this morning on this trade news. But there was an odd part of this around Qualcomm and NXP, where apparently the Chinese are like, okay, you can get together now, which is sort of like the groom's parents breaking up the wedding, and 3 months later, when both have moved to different cities, saying, yeah, you can get married now. And Qualcomm's like, well, no, we've moved on. I mean, why is that stock in particular, both of them popping? Is that more about the semis, or are investors hoping that there might be some play for each of them still?
I have to say that's one of the most fascinating analogies I've ever heard, so thank you for that. What I'd say, I think the reason these stocks are moving up is, one, the broader semiconductor markets are moving up, so that's giving you some sort of uplift. Tariffs getting pushed away a little bit is helping the smartphone narrative to some degree. They both are smartphone-levered names. And on NXP and Qualcomm, maybe to some degree, if this opens up the potential for more M&A to happen, then maybe it's not Qualcomm, but perhaps someone else could look at NXP. The potential of more M&A is a positive for the entire semiconductor space, because that had been the big catalyst in 2016, 2017 in the names.
Right, and Victor, there had been, it's interesting, Amazon is up still about 4.5% this morning. It hasn't come off of its highs as much as some others. There had been some more news coming out of AWS still end of last week, over the weekend. Do you think this move and the strength of it relative to some other stocks this morning has more to do with the AWS news, or something broader about trade that is going to perhaps affect Amazon in an outsized way?
Well, I think it's all of the above. But I do think, with the easing of a lot of the macro pressures, at least optically from what we see, I think you should see a rally for these FANG names, not all of them, for Amazon particularly into year end. Given that these stocks tend to over-index on the downside during periods of immense market volatility, and so the snapback, I think is warranted. For Amazon in particular, though, so yeah, AWS, I think it's still somewhat of a powerhouse in the cloud services business. Is growing top line 40%, margins are expanding. I think investors have been concerned about the e-commerce business for Amazon and whether or not it's slowing. But Amazon has confirmed this to me, by the way, is that the spend per Prime member continues to increase, as well as the number of Prime memberships continue to grow in the U.S., which is a mature market, as well as outside of the U.S. I think Prime membership, the runway for that is pretty long and wide. So the fundamentals for Amazon hasn't really been altered, hasn't really been changed over the past several months, given the market volatility. So you also, as well as the advertising, I think investors have come to realize that Amazon will be a significant player in a high margin revenue stream, roughly $12 billion next year. So I think all of these is probably what you see, as well as the easing of some of these macro pressures. That's what you see into the stock, and I do think Amazon rallies into year end.
Victor, does the ceasefire between the U.S. and China do anything to affect these big cap software names, internet names, especially when you look at some of the other risks that have been plaguing these stocks, and part of the reason they've been selling off? Potential regulation, regulatory risk, the need in the case of Facebook to spend more on security and on the information that's on its site, et cetera. Does any of that change?
Well, nothing really changes dramatically. I think as far as the trade wars, I think somewhat on the e-commerce side for Amazon, there may be some pressure there. If we had the hike in January, but Netflix has its own sort of fundamental issues. Very big, strong platform, high valuation, but it burns cash at a significant rate. I don't see that inflecting. At least probably at the earliest until 2022. So it's own sort of issues. Alphabet, Google, my check's coming back strong for search. YouTube continues to grow strong. The cloud services business is solid. Good, solid management teams, strong corporate governance, strong cash flow generator as well. And the same thing for Facebook. I think 2019 will be peak investment year for them. You have significant earnings growth, and they don't really get the credit for being a strong cash flow generator as well. And so I think trade, these has been overhang for these stocks. If that eases, I think you'll see a rally into next year as well.
Amit, HP is a name that's also higher considerably this morning, about 3%. How much should investors be looking at who's moving this morning and getting a gauge of maybe what the fears were around tariffs? As I'm sure we're going to get more headlines, as we always do over the next 90 days, for a gauge on how that volatility might affect them.
Yeah, no, absolutely. I think HP, if you look at it, PCs were supposed to get tariffed, printers were supposed to get tariffed. So the fact that these are completely taken off the table, I would say HP was one of the names that was heavily levered to the tariff narrative in a negative manner. Now that that's taken off the table, I think it's logical for this to be one of the stocks that's doing really well, because they were supposed to face the brunt of tariffs, at least in IT hardware space.